This is a Momentum Media production.
Nerd alert! Property Nerds, the home for data-driven property investors, where we uncover Australia's hot and cold markets, latest headlines and trends.
Hey, what's up, everybody? Welcome back to another episode of the Property Nerds podcast. And I'm Arjun, Paliwal, one of your co-hosts here, talking about the property market today, and in particular, a pretty exciting new research paper that we've released here at InvestorKit Buyers Agency. And I've got with me Lee Powell.
Hello.
Hey, Leigh. Leigh, for those who don't know, is the director at Hills Finance and my wife. And we're here together hosting the Property Nerds podcast to share about what's happening in the hot trends around Australia's real estate markets and finance trends as well. We've got a jam-packed episode today to talk about a few important trends we're seeing in the space of finance, as well as a couple of markets that are showing some immense promise. Now, these are just a couple of markets we'll give away. And if you're after the rest of the markets that are on this report, you can check it out and download it for free. It's all about Queensland's affordable rising stars. These are the top 5 high-performing regions under 500K in Queensland. There are more. Could be a top 7 list. It's surprising how affordable property markets are still, even in this day and age with the growth that we've seen. And Queensland's definitely leading the way as one of those regions with a lot of options in terms of that affordability. So yeah, check out that report at investorkit.com.au. And that is Queensland's affordable rising stars, top 5 high-performing regions under 500K. Before we do go into that, I just wanted to highlight something where we've been getting a bunch of awesome comments, emails, phone calls about some of the work we're doing on our YouTube channel. That's InvestorKit, the YouTube channel InvestorKit. And the reason why I wanted to just give that a little bit of a plug in here is that we've been going through something new that hasn't been done on this podcast, but we're doing at the YouTube channel over there. And that is a bit of a monthly location deep dive. So this was a huge demand of people just wanting to hear more about how we analyze a location in the most simplest way, but giving the most amount of value. And we created a series called diving into a location in 10 charts, right? So insert location name and then 10 charts. And we kept this 10 charts going along because we believe in simplifying property markets rather than overcomplicating them. And I felt that, hey, if I could explain where a city is, where it's going, and why it's here and doing what it's doing in 10 charts, we could find a way that could really help everyone, new or experienced, digest property information better. So that's been a super, super popular segment, and that is released once a month on our YouTube channel, InvestorKit. Now, that YouTube channel now has been through Sydney, Melbourne, Brisbane, Adelaide, Perth. We've even gotten to Canberra and soon having Geelong release as well, or other way around. Geelong's gone through, but Canberra releasing soon. We're essentially going through in order from the biggest cities to the more smaller ones and going through the nation just to give you a bit of an update on where it's all at. So yeah, just before we jump into that, I wanted to give that a shout out to make sure that if you haven't already heard about that, please do check it out. It's totally free. It's here to give you the deepest property learning I can give, but in the simplest way. And that's on our InvestorKit YouTube channel. And we're talking all things about each location, diving into it in 10 charts. Don't forget to like and subscribe as well if you're checking that out, because all of that means a lot, allows us to keep putting out more free content to help you on your journey. But other than that, let's jump into the research paper, Hayley.
Yeah, back to it. So I always think it's nice if you're going to listen to the podcast, if you want to bring it up again, you can find it on investorkit.com.au/white papers. And so again, the report, the top 5 performing regions under 500K in Queensland. Firstly, why did you choose the price point of 500K or under?
Yeah, so we're recognizing a few things across Australia, Lee. It's a really good question. The first one is borrowing capacities have dropped between 30 to 40%. And that's meant that people are actually not choosing this price point by choice. They're choosing this price point because they're forced into it from borrowing changes. If you're on your second or third property, instead of having an abundance of choice and you're thinking of your next ones, you're going down to that price point. The second thing is we also wanted to show people that investing doesn't need to be extremely expensive. I'm not saying that 500,000 is cheap by any means, but in the grand scheme of things in Australian property markets, it is something that can be quite affordable. And the final part is Queensland just happened to have the most frequency of markets in this price range and the most frequency of high-performing markets in this price range, which is what it's about at the end of the day.
Yes.
And so when all those three came together, we thought, hey, last year, this time, we actually released a report that was similar. And a lot of these locations did what we said it would. And by popular demand, it's back again. So we wanted to share that so everyone can benefit from those who are looking for research to unpack those affordable areas.
I think that's an important point is you could buy a property that's 800K, but if it's not a high performing asset, this 500K or under list could be a much better outcome from an investment standpoint.
Absolutely.
Awesome. So there's 5 areas. The 2 that I want to dive deeper into is Townsville and Rockhampton. So I know that you guys have been super busy buying in those areas with InvestorKit. So both of them have witnessed notable increases in median house prices over the past decade. So can you dive into the driving forces behind this growth and impact on affordability in these regions?
Yeah, these 2 regions are very interesting. So if I go back firstly a couple of years, back in 2021, we pointed out that both of these regions were about to boom. And they had not boomed in the 10 years prior to that. So very weak growth leading up to it, which is actually one of the initial, I guess, fundamentals to start growth cycles is when they have been, I guess, not performing as well. The second thing is, if you want to start on the most important factor, it's not usually what people think. What people think the most important factor in terms of the driver, they think of cheap prices, they think of good yields, they think of affordability during this price where it's not just cheap, but it's also an area where people can actually go and get something with their borrowing capacities declined. But that's not it. The biggest driver to the market cycle first starting in both of these areas is their local economy. When it comes to Townsville, that's one example we can jump into first. That local economy has seen one of the biggest turnarounds I've seen amongst any Australian city in the country. To give you some context, Townsville unemployment rates reached double-digit percentages back in 2016, double digits, over 10%. And whatever forum you went to, whatever community, whatever person you knew who'd lived there, knew of it, the first thing they would talk about is lack of jobs and high crime. Then what happens, the next thing they talk about is lack of price growth. Now, these can seem like red flags to investors. It is a red flag until it changes, right? And that change is what happened. Townsville unemployment rate for the last data release that's there is under 3%. And that's come down from a double-digit percentage in 2016. You've seen infrastructure per capita at $89,000. That is not a small amount. That is very high. Essentially, the projects in Townsville are very significant. We're also seeing the GDP growth or GRP growth for the area rise by 3.5% year on year, so a healthy move. And then if we're going further in terms of some of what's driving it, we're seeing not just the economy, but a huge level of undersupply as well. Now, that's not only Townsville. A similar story can be said for Rockhampton, with over $74,000 in infrastructure spend per capita and seeing its unemployment drop as well substantially from the earlier parts of this decade in 2014-16 at very high amounts. It's now just around a little bit above the national average, but not alarmingly. And so from that perspective, it still had an improvement, just not the same economic strength as Townsville has.
Yeah, that's really interesting. and huge uptake on growth there. So I guess Townsville is boasting a high pressure sales market with a median house price of $425K showing on the report, while Rockhampton's median house price was actually sitting only slightly higher at $430,000. So what are the primary distinctions in the sales market dynamics between these areas, and how are they influencing the buyer and seller strategies?
Yeah, I actually think there's not a huge amount of difference in terms of the two markets when it comes to the sales market dynamics, right? When I think of them, I think of their aspect of like the lack of growth that they've had. They both have that similar trajectory over the last 10 years. In recent years, they've both picked up. The second thing I think of in terms of the inventory level. So when we look at the sales market dynamics, we look at inventory. And for anyone who's new to this metric, I'd like you to think of supply and demand not as two separates, but as one. That's the best way to explain this metric. And a way I can explain that simply is, imagine you've got 30 properties for sale in Rockhampton, and then imagine you've got 10 houses selling per month on average. So if you hypothetically said no new sales or no new properties can come for sale in the market, how long would it take for the sales average to clear out all the properties for sale? And using that metric, 10 sales per month average, 30 properties for sale, that is demand, 30 property for sale, 10 per month average, that's the demand there, and the supply is the 30 per month, the demand is the 10 per month average. You look at it together, that's 3 months of inventory. In both of these markets, you've got 1.8 months, which is extremely tight. That would basically say that if you had, the sales dynamic there, it's actually almost half. So that's huge. It's almost having like, instead of 30 properties for sale, you've got 15 to 18 properties for sale. So that means it's going to be gone in 1.8 months, which is extremely strong.
And sorry, just why would that be good from a buyer's point of view?
Yeah, so from a buyer's point and seller's point, let's break it down. From a buyer's point of view, it's good because if there's low supply and that high demand that's happening, so 18 properties for sale, but 10 per month are selling, it means that if you get your hands on one of those assets and you're in that market, that capital growth is expected to be strong because there would have been many people that missed out due to such low inventory. And then when people are expecting short-term growth, it's likely to be higher in markets with low inventory. If you're looking for sellers, it's also good for you because you're likely to get a competitive buyer scenario with multiple offers. We're then going to increase the price in that market.
Awesome. And so obviously the rental market analysis is another very important indicator. So both Townsville and Rockhampton are experiencing high pressure rental markets too. So what factors contribute to this rental pressure, and how does it affect landlords and tenants? And additionally, what are the projected trends in rental prices given the current vacancy rates?
Yeah, so with rental trends, the first thing I want to shout out is the rental crisis in Australia is not unique to just Townsville and Rockhampton. Every one of the regions in this report, the other three that are on this, all suffer from the same, and the majority of Australia is going through it. So it's by no means a Rockhampton, Townsville thing. But before I jump into the rental stats, I wanted to point out one more thing that people may not realize how tight the supply and the sales aspects are. If I use Rockhampton, with something we look at is trying to compare the pre-COVID and the post-COVID period, right? 33% less listings in Rockhampton today than there was just before COVID. So that means just over 4 years ago, there were 33% more properties for sale. If we look at Townsville, this number is 12%. So not as heavily undersupplied in terms of that pre-COVID average, because it's always had a fair bit lower. But in terms of Townsville, it's still undersupplied as well. Rockhampton's one is huge. They both also have fairly low stock on market with around 1%. So I wanted to point that out just to make sure people know that how tight the supply conditions are in both of these markets. As for the rental market, in terms of what factors are contributing here, firstly, when we look at the rental market, I'll bring up Rockhampton. It has a vacancy rate of 0.7%, extremely tight. Wow. If we look at Townsville, same there, 0.7% vacancy rate. So both really, really tight. Their rental markets over there are seeing below 1%, which means that you're likely to have rental growth continue pretty heavily. If we look at the rental growth in Rockhampton, it's had Both of these markets have had circa 7% rental growth, so it's been fairly healthy. But in terms of Rockhampton's rental yield, it's slightly higher than the rental yield in Townsville. If we're looking at projected trends, I'm expecting the rents to grow again for both of these areas at between 6 to 10% over the next 12 months, which means that you're likely to see above long-term average growth rates of rents, because in the recent decade, rents have been pretty sluggish across Australia outside of this recent rental boom. So that is above the decade averages for both. When supply is this low for rental vacancies, it just means that rents are likely to increase. Now, there's a component of affordability for rents that's starting to creep in across the whole nation. So which is why, in my opinion, the rate of growth in rents across Australia has slowed. But in terms of the supply for rents, it's extremely tight.
And the next important thing would be the economic growth and infrastructure in these areas. So the report highlights economic growth indicators such as unemployment rates and infrastructure project values in both those areas, Townsville and Rockhampton. So how do these factors correlate with the performance of the property market in each region? And are there any upcoming infrastructure projects that could further influence the property values?
Yeah, so I think with infrastructure, I mentioned earlier, they both have high infrastructure spend per capita. Townsville edges Rockhampton in terms of infrastructure spend per capita, local economy GRP, and unemployment rates. So if you're looking at economy alone, Townsville wins that battle against the two, right? You've already had a lot of infrastructure come into play, like the city deal that had the stadium come up as a pretty iconic one. I don't think infrastructure should be looked at the viewpoints of what will come in that will influence markets immediately, because I've always struggled with infrastructure to go, is it when it's announced, the hype's there, now everyone's buying in Brisbane because of the Olympics, right? That's 10 years away and everyone's already talking about that in every decision they make. Then secondly is, well, is it happening when the actual, dollar spending is happening? Or is it happening when it's already built, the town is benefiting, and now people see that benefit? And because these are long years of play, you don't want to be attached to the infrastructure itself for the reason. You want to have a look at a holistic economy. And how I look at that holistic economy is I'm looking at components of unemployment. I'm looking at infrastructure diversity. So are we putting up a windmill that has jobs on construction, then has little jobs afterwards? I'm looking at different types of infrastructure being more diverse. I'm looking at infrastructure spend per capita. So I don't care if it's a big city with a huge $1 billion project. If it's a big city, you're meant to have $1 billion projects. I'm looking at down to the detail of per capita. I'm looking at GRP, the actual local economy, the gross regional product, and how that's trending and moving, right? And then I'm also looking at job advertisements. Job advertisements is a big one. These are just high level. If we're breaking them down further, we're also talking about local sentiment. We're also talking about, the actual spending data that you can chase up in certain regions. So I think when we're looking at all of those factors, another one I like is airport passenger numbers. If that increases, that's a big healthy number. So if we look at the local economies of these areas, Townsville's definitely a step up, but they're both looking pretty healthy. Rockhampton a little bit less so in terms of its local economy, just because it sits above the national average in some metrics that we don't like, but then it also sits in strength in other metrics. But if you're looking at the economics of these two, the biggest learning I'd say to people who don't know cities like them or think that, hey, you're in a major city and major cities look a lot different when people say the word economy. And that means skyscrapers, and that means lots of people in suits and dresses or whatever you want to call it. That is not how an economy works. It isn't just about the suits and ties and skyscrapers. Actually, some of the worst performing economies out there can be empty skyscrapers, right? So let's not just think about that. The key is to think about it holistically and also thinking about it relative to its local population. And that's where the Townsville market, as an example, is having a lot of strength.
Fantastic. So building approval rates indicate low incoming supply in both Townsville and Rockhampton. So how does this balance between supply and demand impact property prices and investment opportunities in these areas? And are there any potential risks associated with oversupply in the future?
Yeah, this is a great point. So firstly, I feel like I've said this is a great point to a lot of points. You've been raising some really good questions. Well done, Leigh. Well done. Appreciate it. Good questions. So firstly, when it comes to the infrastructure and incoming supply in these two cities, it's extremely low, right? We use a metric called building approvals. And with building approvals, we grab incoming percentage of building approvals. How you can do this is you grab the area's recent building approvals, total it up, and divide it by the current houses in the area. So you get a metric of incoming percentage. Now, when we look at this, we like to do something called quartile benchmarking. So if we grab the upper quartile, you're essentially saying these are the areas in the country that have the highest percentage of incoming building approval supply. And then you benchmark it against the city. Is the city sitting with that upper quartile, or is it sitting below? Now, I've mentioned this on many data deep dives in the past. You cannot use an individual metric in isolation to decide everything, because if you do, you're saying that just because it's got low building approvals, it's going to perform. No, we want the three-part approach. We've got low building approvals in these cities. We've then got low established supply, low rental supply. That is a economic activity then on top of that overlaid. Then you've got something special, right? Because you've got low, low, low and heavy demand on economics, and there's other demand factors that have gone through. That's when something special starts to happen. Now, if we're looking at the incoming supply here for Rockhampton, it's got 1.02%, very small amount of incoming building approvals. It's been very low since about 2013-14, because 2013-14 was when it was quite high in Rockhampton. In the previous sort of 2007 to 2014, overstimulus of construction, lots of construction, and that really kills itself. And this is something I truly believe in. Markets will kill themselves, okay? What I mean by that is that if you are really excited about a market and it is firing on all cylinders, job strength, economic strength, and then building activity just keeps firing up and up and up, then the local market goes, I want to sell my properties because this is a great time to sell. Then listings go up and up and up. And then all of a sudden, investors are FOMOing and they want to get in. They're getting every single stock in there, and rental vacancy starts increasing because investor proportion starts increasing. A market kills itself. The boom will end on its own. It doesn't need, one indicator alone to do that. It can have all of these things come together when the cycle's truly shifting. And that's what happened. Once that boom of construction happened in the last decade in Rockhampton, you can see it just killed itself from having too much construction. Price growth did not happen. The local economy faded. And the same thing happened in Townsville as well, which is why you'll see many scenarios. People have 2008 to 12, 13 properties, and they're reselling it at similar prices because all aspects of supply was killed. Established, rental, construction, and the economics of that city were also heavily impacted. So what we can see here is Rockhampton has very low supply. And then if we look at Townsville as well, the same thing at 1.03%. So they're almost pretty much identical. Very low supply in both of them. Now, Townsville was recovering in supply leading up to COVID, but then post-COVID, it fell off again and hasn't recovered. That is a bit of a story for the whole nation though, Lee. So it's not like building approvals are low just because these two locations are there. They're quite low in many parts of the country. Obviously, each region has its own thing. But the key thing here is that having them low for too long is also probably not a good thing, because if the construction market, which is a big job force around all of Australia, isn't stimulated, then that also is a problem. I do think so far the economics of these cities are both healthy, that economies of these cities are both healthy, that this hasn't persisted to be a problem. But the longer this goes on in Australia, this will be a problem for local economic conditions if builders just can't build and don't get stuff approved and out there. Because it is an industry, right? You can't just look at it from supply for property drivers. You also have to look at it from the industry itself.
Right. And when it comes to long-term investment potential, so I guess in a general sense with InvestorKit, I know that you guys, the idea is to buy, hold, and then depending on your exit strategy, so to speak, or your retirement strategy, you may sell later on, but that's not the initial goal, is to buy and sell, right? But with the median house prices increasing steadily over the past decade, what is the long-term investment potential for property buyers in Townsville and Rockhampton? And how do you see these growth rates compare to historical averages, and what considerations should investors bear in mind when evaluating these markets?
Okay, cool. So firstly, I think when I think of long-term and short-term, I have to always consider the investor's portfolio in front of us, right?
Yeah.
Which is why when we're looking at this report, I want to firstly make sure everyone knows these aren't locations to say they're the best and everyone should go and buy them because they're the best and that's how it works. everyone listening into this or downloading that report will have different portfolios, different starting points. It doesn't make sense for Leigh and I to pick up more and more Queensland residential investments. We have 3 in Bundaberg, we have 1 in Townsville, we have a Brisbane one. So like the list goes on. So this doesn't make sense. Otherwise, we're not going to get that diversity. Then also, where is the current portfolio cycle positioning at? And could you be in somewhere much earlier? Or should you be in this position here and go into the heat that's here? This is where you got to look at it holistically. But when it comes to the long-term potential of any markets, having studied markets all across the nation, I've learned one thing. There is no market in the country that's immune to periods of low growth, that's immune to periods of decline, and that never booms. Markets have boomed, markets have declined, markets have stayed flat almost everywhere. And so as an investor, you want to firstly look at what your portfolio needs, doesn't need. Secondly, you want to look at the phase of the cycle and where it's at. And that's something I think that's our biggest strength. We can understand the phases of cycles.
Yes, because you haven't quite touched on it. You guys focus on the different cycles, one part being the accumulation phase, the next part being, what's the next part? So at InvestorKit, we've got 3 phases of growth. We think there are parts that are early adopter markets. These are markets that are at the start of their cycle. So if you go to Townsville, for example, and Rockhampton, we call these out in the early 2020s, so 2020, 2021, saying, hey, these are about to be the start of the cycle. Then we have hotspot markets. This is like the Brizzy, not quite Brizzy, it's more Adelaide. It's where Perth is. Markets that are doing really strong growth in terms of now and expected to grow heavily now. And then you go to second winds. You can have 2 parts of second winds. So you can have markets that are second winds that have come off growth rates and you think they're about to bounce again. So example, Bendigo has come off a growth rate and we think that it's actually good buying there as an example, right? Another one that's come off growth rates, then bounced back. The second phase of the second winds is markets like Brisbane and Gold Coast. They dipped a little bit, they flattened, their listings went up, and then suddenly there's a pullback of that supply and they're back to strength again. So this is an example of second winds, the dip, then back up again. When it comes to early adopters, I actually should mention there's also one more cycle position where you're like earlier than early adopter. So I call it a watch list. And this is where we're like saying, ooh, something's about to come here. We're about to classify it as an early market and we think it's starting and it's about to take off soon, but we're going to beat everyone to it, right? And hey, look, hint, hint, there's some markets around Victoria showing that. I won't say exactly where, but early. Something's up, something's changing, they're about to come through and then they'll go through again. And so with these 2 cities, they're sitting in the hotspot category. It means that their growth rates are expected to be very strong. And when it comes to their growth rates, it probably could also almost see growth between sort of like 8 to 12%. It wouldn't be uncommon to see that in these markets, if not more, over the next 12 months. And I'd say there's some legs left in them because of how little growth they've had over the last 10 years and how undersupplied they are and where their economic profiles are. So I would say that whilst they're this affordable, the economies are that strong, they're that undersupplied, they've got some room to go in their long-term growth rates. You could expect some strong growth rates in these cities over this year for sure and over the next year or 2. And then it's about constantly monitoring those indicators to see, are they going to fall off their cycle or are they going to come into a second wind and calm down and maybe come back up again? But I think that's the best way to look at different cycles where markets are doing different things. There you go. So whether you're a seasoned investor or just starting out, InvestorKit offers valuable resources to help you plan your long-term success in property markets across the country. So visit their website today and you can access their tools, their white papers, which obviously we're going through today. And that's investorkit.com.au/white papers, or there, I guess there's like a call now contact button as well that you can click on. My last, I guess, question is around regional variations and growth forecasts. So given the differing growth rates and market dynamics between Townsville and Rockhampton, how do you anticipate these trends evolving in the years ahead? And are there any external factors such as government policies of demographics shifts that may impact future property market performance in these regions?
Yeah, I don't think there's any huge shifts that are like things that I would say are going to negatively shake them up from their trajectory. I would more so say that, there would just be the growth rates here and how far they go on for. They're at extremely strong levels now. They've got some legs in them, and they're both in a similar cycle position. Both have strengths in them, different types of strengths. Townsville's economy is a little bit stronger, but both cities are performing well and undersupplied across all those metrics. I just don't think there's any sort of key policies, demographic shifts, or things like that that may heavily impact them in the coming years. I do think, though, that we're not now, but towards the end of this decade and the new decade ahead, people really need to get serious about what the retirees are going to do with their money. I think lifestyle, regional locations will come back up again. There are many parts of the country where their growth rates have been stunted after huge growth rates that they had, like the regional coastal New South Wales cities, like, Hervey Bay and a few other areas where they calmed down in recent times. I do think that at some stage they're going to bounce back up again just because of this huge wealth transfer that's going to happen. But you know what? Again, that could be like a Brisbane Olympics thing, right? It's 2032 and people are talking about it today like I'm talking about it today. So could that be just people thinking about retirement and already using equity and buying it or transferring wealth to their kids with guarantor money, gifting money? That could be it. People could already be buying their lifestyle place today, and I could be wrong with my timing. So the timing could not be the 2030s. It might be happening now, right? But the numbers don't suggest now that market recovery is so strong in the lifestyle markets. But I do think that recovery will kick in soon. And for these areas, their growth forecasts are expected to continue. But yeah, that's it basically from me, Lee, on this particular research paper. And that's two areas, Rockhampton and Townsville. There are three others doing their thing in terms of the data and in this report. And if you'd like to grab a free copy of this report, again, it's investorkit.com.au, and jump on the property research tab where we release reports like this every single month. Next month's one is going to be on the rental market crisis that's still there. This time last year, we released that report, and that was featured on the Weekend Today show. So I jumped on Tally, sharing a few case studies on the research, sharing what the predictions were for the rents, and they came to fruition. We also shared that Adelaide would be 2023's best performing capital city, which it was. And we also shared that Sydney would go back a little bit before recovering again. And so those are last year's predictions on the Weekend Today show. And we're looking to share more in the next research paper. And of course, this research paper here is online and free. So check it out.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Game over.